Welcome to Talk Tickers, where we break down the earnings calls that move markets. Today, we're digging into Visa's fiscal fourth quarter 2025 earnings report.
So Visa reported right after the bell on October 28th, and they delivered what I'd call a narrow but really clean beat on earnings per share. I mean, they came in just 1 single cent ahead of what Wall Street was expecting. All right, so here's the game plan. We'll kick things off with the headline numbers. Then we'll unpack management's growth story. From there, we'll talk about the guidance and what might be worrying the market, and then wrap it all up with our final verdict and a pretty interesting trade idea.
Okay, first up, the headline numbers. Let's see exactly how Visa stacked up. So as you can see, Visa really did deliver a solid quarter. They beat expectations on both adjusted earnings and on revenue. And this whole performance was basically anchored by some really sturdy growth in total payments and, crucially, that all-important cross-border volume. You always got to watch that one.
Now, the context here is absolutely key. Look, while Visa just posted a strong 12% year-over-year revenue growth, their guidance for next year is just a touch lower, coming in around 11%. Now, don't get me wrong, that's still really robust, but it does signal a potential moderation ahead, and you can bet the market definitely noticed that. So, how did these numbers fit into the bigger picture? Well, management is framing their whole long-term vision around this core concept they're calling Visa as a Service. On the call, the CEO laid out this pretty cool 4-layer innovation stack. The big idea here is to position Visa not just as, a card network, but as a true hyperscaler for anyone, anywhere who wants to build services that move money. They're basically building their competitive moat for the next decade. In this chart, it shows you exactly where the real engine of growth is. I mean, sure, consumer payments are still the core, but look at this. Value-added services and the commercial segment. That's where the action is, growing at a blistering 25% and a very solid 14%.
And the tone from management? It was just unequivocally confident. They kept hammering this point home, that Visa is central to leading the next waves of commerce. They specifically called out some pretty futuristic stuff, like AI-driven agentic transactions and stablecoin settlement.
Okay, but here's the thing. Despite those solid results and this really compelling innovation story, the market's reaction was, well, pretty quiet. And when we dig into the guidance, you start to see why. So the guidance, while strong in absolute terms, kind of implies that growth will be pretty consistent with this past year. It doesn't signal that major re-acceleration that I think some investors were really hoping to see. And that's the key to understanding why the stock basically went nowhere.
And right here, this is the central tension from the whole earnings call. You've got cross-border volumes still very healthy, growing at 12%, but that pace has cooled off just a little bit from earlier in the year. And it's this subtle shift that's really tempering expectations.
So, here's how the market actually digested all of this. You can see this bullish-leaning neutral report was basically met with a collective shrug. I mean, the stock popped a modest 1% in after hours, but all that enthusiasm just fizzled out by the next day.
All right, so let's pull all this together. What does it actually mean for the stock going forward? Here's our call. We're initiating our rating on Visa at market perform. Now, what does that mean? It just means we expect the stock to perform pretty much in line with the broader market, think the S&P 500, over the next 12 months.
So to be crystal clear, our final verdict is market perform. It's an amazing, high-quality company, for sure, but it's not necessarily poised for some kind of significant outperformance right now.
In this rating, it really reflects a balancing act. On one hand, you've got Visa's incredible execution, their innovation pipeline, huge buybacks, all that good stuff. But on the other hand, you've got the reality of moderating growth in those key segments and, frankly, a valuation that already prices in a lot of that high quality.
And finally, let's have a little fun. Let's explore what we're calling our outrageous but plausible trade idea, building on the themes from this call.
Okay, so what if the market is totally underestimating Visa's potential in Web3? The trade idea here is to play for that upside. One way you could think about doing this is with long-dated call options. Now, this is basically bet that if Visa's whole stablecoin thing disrupts B2B payments faster than anyone expects, the market will have to completely reevaluate the company, not as a payments network, but as a core piece of future financial infrastructure. And that could lead to a massive re-rating of the stock.
And as always, please remember, this is not financial advice.